Hi, it's Dave. Welcome. Today I'm joined by Rob Maurer from Tesla Daily. He's got a YouTube channel and a podcast, and he's one of the kind of long-standing Tesla analysts covering Tesla. I've had him on my channel many times, and glad to welcome you back, Rob.
Yeah, thanks, Dave. Always good to talk to you.
Yeah, it's always fun. I noticed it's been already 3 months since our last chat, and I was like, we should do this more often.
Yeah,
But
yeah, it goes fast.
yeah, what was your I saw your interview with Jim Cramer this morning on the street, his live show. Fantastic. I like
Thank you.
totally appreciate your just kind of rational, down to earth, stating the facts, So what's going on, man? What was your impression about this quarter? Honestly.
Yeah, I think it's a mixed quarter. There's some good, some bad. Overall, my takeaway was, pretty positive. I think reading reactions online, people have had mixed feelings. A lot of people disappointed with kind of the updates on full self-driving version 9. Not a clear timeline there in terms of how that rollout is going to come. So I think people were a little bit disappointed with that. Maybe a little bit of disappointment in terms of 4680 battery production. Elon saying, 12 to 18 months out from high volume production. So I think some disappointment there. But on the other hand, we got, I think, some really good positive numbers here from Tesla. When we look at the financials, I was talking with Jim this morning. I was super, super happy with Tesla's automotive gross margin X credits, especially knowing that there was $200 million of additional costs they estimate from the production issues that they've had with Model S and Model X. Zach said that most of that went into cost of goods sold. So if we assume 150 million of that went into cost of goods sold, then Tesla's margin X credit was 23.8%, which is way better than it was in Q4. It's better than it was in Q3. It's the best it's been in at least a year and a half, and that's as far back as I looked today. But I was really happy with that. People that listen to Tesla Daily know that that's kind of the first number I look at when getting the earnings is that automotive gross margin X credits, because I don't care about the quarterly results. I just care about what they mean for the future. And that's a good signal for us that they're progressing well on their costs, even with all the logistical and supply chain issues that they mentioned this quarter. So mixed quarter, but overall, I think a lot of good stuff to be excited about for longer term, even if it might take us a little bit longer to get there than we'd like.
Yeah. So some people who are just new to following Tesla stock, they're looking at today's stock price, right? As at the time of this recording, it's down like 3%, right? And some people are freaking out saying, hey, it's a terrible quarter. What's going on? And there's mixed messages. Some people are saying, hey, it was a great quarter. The stock price is saying not. Like for the newbie who's following Tesla, what do you say to them to make sense of, today's price action?
Yeah, you gotta, first, like day one, introductory, like Tesla class 101 should be, the first lesson should be like separate the stock price from the business. Like they're not the same thing. The stock's reaction in most cases has very little to do with how the company is actually doing. And for proof of that, look at the stock price from like 2013 to 2019. It was just flat. Meanwhile, Tesla was growing at 60% a year through that entire period of time, generating this insane operating leverage. And then like finally the market's like, oh, like, hey, that's pretty cool. Like now we like that all of a sudden. So yeah, it doesn't mean I honestly haven't even looked at the stock price today. I think I checked it like once this morning, but I just at this point I don't care. Like what's more important to me is the fundamental progress. I'm a long-term investor. I do some short-term trading sometimes, mostly just for fun. But that's like the lesson one is just like don't worry about it. Excitement, people get excited heading into earnings. There's always the potential that something that we don't know that could shock us could be announced, or that the numbers are just going to blow everyone's expectations away. Tesla's going to print $1.20 in earnings or something like that, beat the forecast by 50%. And then when things like that don't happen, it's like, okay, investors might sell off. There's a lot of earnings going on this week. They might go to the next play. So it's tough to look at a stock and say that, oh, it's down. Investors were disappointed. Maybe it's down just because there wasn't anything super exciting and they moved on to the next stock. There's no way to really know that unless it's super obvious, which, Tesla did beat earnings. So I don't think there's anything here that's super obvious of like, oh, this is why the stock is down. I think it's just, and the overall markets are down today too. So that always has an influence as well.
Yeah. I had this thought yesterday. I was like, or the day before, I'm like, I don't know if retail individual investors really have any advantage going into these earnings nowadays. I mean, several years ago, you could say that, hey, it wasn't covered much. People didn't know much about Tesla, and the financials and the demand and all this stuff. But nowadays, like this stuff is like Tesla is a hot company, one of the mega caps. Like there are people who know more than the retail individual investor in terms of what's going on with suppliers and different just behind the scene stuff. I don't know. What do you think? I mean, to me, it feels like the retail individual investor, if they have an advantage, is more on the longer term, like at least a year out, like they're more confident than, let's say, a trader or a typical, let's say, Wall Street person that Tesla will continue to execute, will continue to grow faster than, let's say, what some people think. What's your take? Do you think retail individual investors have any advantage with quarterly earnings anymore? Yeah.
Yeah, I think there's a lot of nuance in there. I think that's a really good point. I wouldn't say that like institutional investors necessarily know more than retail investors. The knowledge base, I think, among retail investors that actually stay up to date and are informed is greater as a whole. But to your point on supply chain issues and things like that, the knowledge base is a little bit different. So they might have a different set of knowledge that is maybe more beneficial for short-term things like this. Because, they're doing those supply checks, they're talking with executives from all these different companies, things like that, which retail investors, they just don't have the capability or the bandwidth to do that. So I think there is a different set of knowledge that is more impactful on these quarterly results than what we're talking about. But to your point on longer term, that's where I think I agree. Retail investors have the advantage there because retail investors, like, they don't need to generate some certain return every single quarter. They, it's your own portfolio, your own manager. You've got a time horizon, and you can sit on Tesla stock with no return, like I did from 2013 to 2019, and that's fine. Like there was no pressure on me other than maybe it's a little bit disappointing to have to sit through that, but in the end it pays off. Wall Street doesn't want to sit through those periods of times, whereas retail investors I think can. The other point, just on like the understanding of Tesla, I think it is getting better in terms of Wall Street and institutions. As a mega cap now, Tesla has more intense coverage than ever before. There's more analysts covering it. There's more people on those individual analyst teams covering it. So they do understand it a lot better now than they have in the past. I still don't think the long term is well understood, but certainly for like the quarterly results, the numbers are becoming closer in terms of the consensus to what the actuals end up being reported.
Mm-hmm. Yeah, I mean, you make an interesting point how, let's say a more short-minded investor might not be able to sit through, let's say, a 6 to 9 month like difficult patch. Let's say Tesla is projecting like some major issues, 6 to 9 months. A lot of investors will say, I'm not touching that, But the individual investor, if you're like, hey, that's nothing, in the bigger scope, it might be a buying opportunity, might be, it's a great time just to hold through as well. This quarter was interesting for me because it was a little bit complex than in a sense where I think on the surface you had this extra tax credit, right? And then you had the Bitcoin sale, you had a lot of stock-based compensation, you had these one-time expenses from moving over to the SNX refresh, and all of this stuff is a little bit confusing on the surface level, and that makes, I think, for today's stock price, maybe it's this confusion. It's like, what was this a good quarter or was it not a good quarter? But
right.
When I look down at the numbers, I'm like, hey, like the tax credit, fine, it seems pretty strong, I mean, it's actually a bullish sign in my opinion that tax credits are fine. Bitcoin is a one-off thing. And then the stock-based compensation is positive because it'll go down in future quarters. There's not much left. And then you have this one-time hit from the SNX refresh. That's good news too, because it means, as you're saying, gross margins is higher. They could have actually reported higher profits. So I'm looking at this, I'm like, this is actually a pretty strong quarter. I don't see any like huge red flags. I mean, what are your thoughts?
Yeah, I agree. And that's why like the fundamental progress that Tesla's making, going back to the automotive gross margin X credits, is awesome. Like no SNX, very little SNX sales at super low margin this quarter because they're just working through that old inventory. And yet they still reported, 22% gross margin, even including some of those things that are one-time hits. it just shows that how profitable Tesla is getting to be with the Model 3 and the Model Y. And the Model Y is just ramping up in Shanghai, so it should have relatively low margins for what it's going to achieve in the future right now from Shanghai. So, like you said, there are a lot of things that I think make the earnings confusing. People talk about the positive influencers a lot, like regulatory credits. They don't talk about those one-time things. Like I haven't, you're not going to see a mainstream media article about the $200 million additional cost from SNX, even though that's way more than the increase in regulatory credits. So that's like an easy one to go to and be like, oh, Tesla, if you take regulatory credits out, they're still not profitable. But okay,
Yeah.
add stock-based compensation back in, and then they are. Add deferred revenue in, and then it just gets bigger and bigger. Take out the 200 million, and it's like, okay, all of a sudden you're at $1 billion in profit on a GAAP basis with like some of these, well, non-GAAP basis. But yeah, the point is it's confusing. There's mixed things in there, but you really have to parse those out. And that's why I love these quarterly earnings, because it gives us a glimpse into what is going to happen in the future. You just have to be smart enough to like dig into it and understand how those factors are influencing today and how they're going to influence tomorrow.
Yeah, definitely. Like I look at the 200,000 or 200 million hits for SNX refresh, that can cancel out the extra regulatory credit bump and also the Bitcoin profit, right? So you're kind of at a wash, but then you've got, the stock-based compensation that's going to go down a lot in the coming quarters. So yeah, I don't know. It looks pretty positive to me. I mean, a lot of this stuff isn't talked about. For example, like Europe, like Tesla isn't shipping like Model Ys to Europe. They're waiting for their Berlin factory. So this is a huge market that's untapped. And then the US, if the Biden, EV credit passes, I mean, we're talking about Tesla can sell almost any, Model 3, Model Y that they can produce. And it's extremely bullish that, going forward. I mean, Elon Musk, he, said that he thinks the Model Y could be the top selling car in the world. A car or truck next year or the following year. And then he clarified it in a tweet saying that, maybe revenue by next year and then volume by the following year.
In a tweet to you, by the way.
Yeah,
modest over there.
Yeah, but I'm curious, what's your take? Like I'm confused here because I put down 1.5 million Corollas because that's what I found. But then a lot of places are saying 1.2 million Corollas. So I was thinking maybe Elon was thinking 1.2 million. When I put down 1.5, maybe it's like pushing him
back because of that.
Yeah, but I don't know. What's your take?
Yeah.
1.2, 1.5, is this even possible? Let's say not next year, but let's say in 2023. Yeah, how does that even work out? Was this surprising to you at all, that type of volume?
It wasn't too surprising. I don't have the exact quotes, but I feel like if we go back a couple of years, maybe 18 months or so, Elon had talked about Model Y being over 1 million per year at one point. So yeah, I'd have to go back and find that, but it wasn't too surprising. I had seen the 1.2 number, so that's what I was thinking. But yes, it sounds like there were some different reports out there on that. I definitely think it's possible. I've been expecting for a long period of time that the Model Y prices are going to drop, extremely aggressively once we get really to the end state of production, which would be, if you think about it, Fremont, Texas, Shanghai, Berlin. Like if they're even just doing 250, 300,000 out of those, which all the production lines so far have been set up to do, that gets you to your 1.2 million. So I think Tesla's going to bring the cost way down as they ramp that production up, and they're going to pass that along to consumers pending, tax credits and things like that. They may not even have to do that, but there's going to be so much room to bring the average selling price on those down. Some analysts are going to complain about that, but that's been Tesla's, modus operandi for literally their entire history. So yeah, I think we might see a $35,000 Model Y someday. That wouldn't shock me at all.
Yeah. I mean, that's the kind of the main takeaway I got was I'm like, whoa, it's like Tesla is going to drop the price of the Model Y to support that, that demand. And I think part of the bullishness of Elon Musk, he's seeing that they're able to make the Model Y for much cheaper than people think. And as a result, they're going to be able to bring down the price, maybe even closer to 35,000, over time, maybe in a few years or so. And that's just going to shock people. And then if range gets close to, let's say, 300 miles, right, for a Model Y, that's like $35,000, $36,000. It's like, that's insane, man.
It's crazy. And that's what I think is going to happen, because as Tesla ramps up battery production, their costs on that are going to plummet. So adding an extra 10, 15 kilowatt hours is going to be like nothing. If Tesla gets to their targeted costs, $50 per kilowatt hour, maybe we're 2, 3 years away from that. But if they get there, adding, 20 kilowatt hours is only $1,000 to their COGS. So, okay, if you have a $35,000 standard range, you could have a $37,000, long range all wheel drive vehicle that has 20 kilowatt hours more and just charge a couple thousand more bucks for that and still earn better margins on that vehicle. So that's, I think, been underappreciated by, most people following Tesla for quite some time. And once Tesla has internal battery production, which Drew yesterday said, their yields are at the points and they're making progress to where they still feel comfortable with their internal cost projections. So I think that was a huge underappreciated point on the call, but it's great news in terms of what Tesla can accomplish on Model Y and products beyond that.
Yeah. Yeah. I mean, it seems like with Elon's comment, I'm taking it, hey, if Tesla can produce the Model Y for under, let's say, 30,000, even with, let's say, a 20% gross margin, that's what, 36,000, average sales price. They can make it up off of full self-driving, So it's not like they're dependent. They have to make all their money on the cars. But I mean, I think it seems like Elon feels like they can go even lower. I don't know how low, but we'll see, over time.
Yeah.
Yeah, it's extremely interesting. On the batteries, so mixed bag, it seems like 4680 cells. Elon says that that these cells currently they're producing aren't really reliable for vehicles. Like that sounds pretty kind of like, what is he talking about?
Slightly concerning.
Yeah. It's like, can't you stick it in something? Like, is it dangerous, or I don't know? Do you have any insights on that?
No, I was a little taken aback by that too. Obviously, if Elon's bringing it up, it's something that's not, overly concerning to him. If it was, I don't think he would be as open and willing to talk about it. So because of that, I'm not like terribly concerned about it. I think it's just a matter of them. I think they're getting cells that are working well. They're just not getting enough cells that are working well enough. So I think they know that the process will work. They just are not at the place where it's working well enough on, enough of the time. That's kind of my read on it. As for reliability, who knows exactly what that means. So also a little bit confused by that, I think.
Yeah, it brings flashbacks to the, like just the concerns that people had. There was a period of time where, there's all these concerns of Tesla fires. Most of it just didn't pan out because Tesla's cells are very safe. But it's also interesting is Tesla is fanatical with safety. They know that if they skimp on that, then it could be the end of the company. So I mean that's definitely a big priority. Yeah, I mean, if 4680 cells aren't ready to go into vehicles right now, even on their pilot plant, then and then he's saying hey, it could take 12, 18, and then he said 12, but then he said 18 months, up to 18 months for volume production. So what's happening with Berlin and Austin? Here are these huge factories that need 4680 cells for this new Model Y with structural battery pack. Are these cells going to come from suppliers, you think, or what's going on?
Yeah, this has been one of the most confusing pieces of Tesla for me for probably the last, since Battery Day really is I think through I asked a couple quarters ago what the plan was for Berlin because they hadn't started work on a battery factory there. And they basically just said, yeah, we'll supply it from Fremont, from the pilot line. But 10 gigawatt hours there, that's not, it's decent, but it's not enough for supporting the entirety of Giga Berlin output, what we think it could be next year. So it's perplexing. And if they're not at high volume production until, Q2 next year, Q3, Q4, it's how are they going to absorb the vehicle production capacity that they have without those batteries? So I don't know. I know Panasonic is working on the 4680 cell, CATL, LG, they're all working on it. Maybe they're not using some of the processes that Tesla is using that's making it a little bit more difficult for them. I know Panasonic, there was a Bloomberg article that Panasonic was talking about thermal issues and things like that. So it doesn't sound like Panasonic is super far along on that either. So I don't know if Tesla can, I don't know if the manufacturing capabilities are flexible enough where they can just use 2170 cells, or kind of what the plan is in the interim before they get this solved and before they get to the high volume production. So I don't know. What are your thoughts on that?
Yeah, it's interesting. I mean, it's it it's a little mixed message because Drew was saying, hey, like that he's confident that the yield is good, you know, it's meeting the projections. Yet Elon has this reliability comment that's like, hey, what's going on? You know, yeah, I mean, it does seem like Tesla has a plan, you know, whatever it is. I mean, it seems like they could, you know, have suppliers supply, you know, perhaps 4680 cells with a slightly different chemistry, so it, you know, it doesn't have the dry electrode process, all the difficult stuff that Tesla has. It's more of a standard cell, right? It's going to cost Tesla more, but maybe that's an interim step. And Tesla is shooting for the next big step change, right? Which is an entire different process that brings down the cost tremendously. So, I mean, they could, yeah, it seems like they have something up their sleeves, but it does seem like maybe production could be limited the first, let's say, 6 months, you know, especially, you know, out of Austin and Berlin. But yeah, it's going to be
Yeah, and
interesting.
I think that's part of like the mixed results of the call is just like, you know, we don't have a lot of clarity on how Q4 through let's say Q2 next year comes together before they really, you know, figure this out. That's why I think we got the advantage of being long-term investors. It's like it doesn't really matter at the end of the decade if that happens in Q1 or Q3 next year. It's pretty irrelevant, but certainly as we go through that period of time, you know, there's going to be a lot of prognostication about that. There's going to be a lot of people concerned about that, concerned about the progress, concerned if it's ever going to happen. Tesla will figure it out. They'll get there. We won't remember it. And, you know, who remembers the Model X delays? You know, I vividly remember those, but like no one's talking about that anymore.
Yeah,
I was like 2 years delayed, like every single quarter. It was awful, but
yeah, I still remember that stuff.
Cares about that anymore.
I remember I was at the Model X reveal, and then like they had the toughest time giving test rides because their doors wouldn't work. And then I took a factory tour the next day, and they had the Model X like kind of design shop there, and then no one was working there. I'm like, what's going on? It's like you just had like the worst like, you know, experience with doors, and you're not doing anything. That's when I knew actually that the doors were something is going on.
Yeah.
So I want to pick your brain on what you learned and picked up in terms of longer term. Like, did you learn anything new regarding Tesla? Any kind of breadcrumbs that might have given you more insight in Tesla? I'll give a few kind of topics here. So first is Master of Coin, you know, their digital currency plans. Like, what did you take from Zach's, you know, answer there? Like,
it was fascinating. That was one of the most interesting parts of the call. So clearly, digital currency is going to be something that Tesla continues to learn more about, invest more in from where they're at today, I think. And it seems like a lot of that's going to go to Bitcoin, but it definitely seemed like they have other things that they are investigating right now based on Zach's comments, where he said, you know, I think Emmett's question was basically like, hey, is there any announcement here, any more information you can share with us on other sort of digital currency plans? And Zach kind of said like, you know, when there is, we'll let you know. But it didn't sound like a no. It sounded like more like a yes to me. So what that means, who knows? Is there going to be a Tesla coin? I don't know. But I think the probability that there would be something like that definitely increased, at least from our perspective of being able to understand that, increased yesterday from that answer. What are your thoughts?
yeah. So when I was listening to Zach, I'm like, it sounds like this guy really likes Bitcoin, you know, really likes this stuff. Like, it's not like this guy is like, oh, we reluctantly, you know, had to put some money in Bitcoin. It's like
forced in.
Yeah, it's like he's like into it. I'm like, whoa, man, this is interesting. And then he's like, yeah, you know, we might have something up our sleeves, but we won't talk about it right now. Yeah, it's surprising.
It's fascinating.
Yeah, yeah, it's definitely interesting. Did you see Andrej Karpathy's tweets about him fiddling around with Bitcoin software, like mining software stuff, quote unquote, for fun?
Software up on GitHub now, like
exactly.
Yeah. It's like not for Tesla, just doing it for myself.
Yeah.
Like, okay, well, your personal interests probably overlap with your professional interests as well to some extent.
Yeah, just doing it personally for fun for Elon because he called me up and told me to, you know, look into it or something.
Yeah, he's been doing some NFT stuff too, though. So I think that's probably less applicable to Tesla. So maybe you shouldn't read like too much into that, but I definitely did think that was interesting in combination with Zach's comments as well.
Yeah. AI, Dojo Computer, real world AI, like, there's been all this talk about this stuff. Did you pick up anything new or any insights on, Tesla's approach here?
Not a ton. I'd ask the question trying to get them focused on more like the business model in terms of being able to outsource that. I know you've had, I think it was James from formerly Arc. You guys talked a little bit about that. I haven't watched that episode yet. I need to, but um, I know he's not as bullish on, an AWS like service for training, but that's kind of what I was hoping to get them to talk about. Elon was, kind of vague. Sounds like they're probably not thinking about that a ton right now as a business model. I think they're just, building what they need, and then eventually they think others can probably benefit from that in terms of training their own neural networks. So I don't think we learned a ton in that answer, unfortunately. The takeaway for me was that they're already working on training auto labeling, and Elon said that the progress there is going really well. So we didn't get much of an update in terms of like hardware for Dojo, in terms of the timeline for completion there, but I was excited to see that they're already on the path of doing some of that training, and sounds like the auto labeling is actually already functional to some extent. So that I think was really encouraging for me in terms of his response there.
Were there any other kind of takeaways more on kind of a longer term understanding Tesla a bit better that you got from this earnings call?
Just taking a look at my notes here. I think we've talked about most of them. Something we haven't really talked about was demand. Makes sense. We don't tend to focus on demand as much because I think we're pretty confident in it. But just knowing that this was Q1, seasonally weak quarter, there's, that EV tax credit that everyone keeps talking about potentially looming. It seems like kind of a weird time to buy a Tesla. And yet this was their strongest order Q1. It sounded like, I'm not sure if it was best quarter ever, but best Q1 at least, in terms of orders. So for that, for them to have that kind of demand in this kind of context, is super exciting. Like that just, and this was the most deliveries they've ever had. So I think that's super encouraging, especially, as we talked about with newer investors that maybe haven't been through the ups and downs in terms of demand worries in the past, that we don't really have to, think too much about that at this point in time is a really great sign.
Mm-hmm. Yeah, definitely interesting. Were you impressed by the whole microcontrollers? They quickly, put out some firmware. Somehow they're able to like avoid a lot of the supplier issues. Like this is remarkable to me. I mean, it's like crazy. Every automaker is getting hit big time, and the Tesla, finds new suppliers, makes some firmware, like changes out parts, and like this is crazy. I mean, what kind of company is this adept? To move so quickly. I thought that was actually interesting because that reduces some of the long-term risk because Tesla's able to kind of quickly move and adapt to supply chain issues quicker than, let's say, existing OEMs. So what are your thoughts?
Yeah, I totally agree with everything you said. I think that is one of the more impactful parts of the letter that, again, very underappreciated. It's kind of like, oh, Tesla figured out the semiconductor thing, but Elon was very clear on the call. This is the hardest quarter they've ever had in terms of logistics and supply chain issues. And yet it was still a record quarter for, I believe, both production and deliveries. So for them to be able to work through that and achieve those results, even with those challenges, is incredible. And that's one of the reasons you're investing in Tesla, right? You're investing because they are, so innovative, so fast, and they're doing things that, as far as we know, other automakers haven't made any moves like that. So yeah, it's super impressive that Tesla could do that on the fly, in the course of a quarter. I think they had some insight into this in Q4, but to be able to react that quickly in such a complicated supply chain, I think is extremely impressive.
Yeah. Wrapping up here, it seems like there are a few headwinds coming up for next quarter. S and X, I was kind of surprised that the rollout seems a little bit slow. Like they're not
Very
doing.
slow.
Yeah, you'd expect them, to kind of hopefully deliver some last quarter and fully ramp this quarter. But then you have some this quarter. I think Model X isn't going to. Is it Model X is going to be Q3, right? And so fully ramping maybe by the end of Q3, did he say, or something like that?
I think he just said like Model X in Q3. I don't think it was clear on the ramp.
Okay, so it's a bit slower than I expected. And I would imagine there might be some additional one-time costs or expenses related to that as well. So it seems like a headwind. Are there any other kind of headwinds, let's say, from this quarterly earnings report you see over the next, let's say, 6 months or so?
Yeah, I think the SNX thing is definitely disappointing, certainly for customers. For investors, it seems like a big deal. It's probably not all that big of a deal. Like those one-time expenses will impact the profitability, sure. I think that'll happen again in Q2, probably a bit in Q3 as well. Um, but again, long term, it's inconsequential. And in terms of the financials, like without SNX, Tesla still had a record quarter this quarter, both in terms of deliveries, in terms of non-GAAP net income. So the business fundamentally is, it's at a place where they don't need SNX anymore. It's a nice luxury to have, but they don't need it. So when those come back into the fold, great. The numbers are going to look all that better. But even without them, I think we're still in a really strong position. In terms of some of the other things, like definitely disappointing energy margin. So they lost $100 million. The energy margin went from being, mid-single digits last year to down 5% in Q4, now down 20% in Q1. Kind of weird. We saw energy storage deployments drop significantly. So I think they're at like half a gigawatt hour this quarter versus 1.5 gigawatt hours in Q4. I don't think we really got a great explanation for that. I think a lot of people, myself included, had expected maybe not sequential growth, but at least a better number than 485 megawatt hours or whatever. Especially because they should have had, they may have had some extra 18650 cells without the SNX production. So that one's a head scratcher for me. The margins, obviously, they've made some adjustments in terms of the package for solar and energy storage, combining those together, raising the price on Solar Roof. I think they'll get that back. I think they're probably just looking for break even right now. So I think we'll see that probably not in Q2, but maybe in Q3. But that's going to be, a headwind on the business, especially from a profitability perspective that we didn't have last year in these quarters. And then with the 4680 cells, like I think Cybertruck is completely off the table this year, it's sad, super unfortunate. Elon has kind of like dodged the question a couple times on Twitter. He's, deflected it and like focused on Model Y. So same kind of thing in the shareholder letter. Didn't really see any updates on the Cybertruck. It just still says in development on their little production capacity table. So I think that's pretty much completely off the table this year. I'm sure the Roadster as well, although I think we probably already knew that one. Plaid Plus. I think all that stuff is delayed, which, sad for customers for sure.
Awesome. Yeah. It's definitely always great catching up and chatting about this stuff, especially right after earnings. It's like so much new information is coming out. You have to adjust.
It's always fun.
I'll go ahead and link to your interview with Jim Cramer that you did this morning. I thought it was great. I was watching this clip, I think before the interview he did on CNBC, where he's like, I hate this, earnings, I'm disappointed. Elon shouldn't go on Saturday Night Live after this, blah, 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 blah. And then during your interview, he's like, okay. I think I understand a little bit better. But yeah, you're doing great work to just, share what's going on. And it's much more complicated, I think, than some people realize. Like there are pros, there are cons, there are strengths and weaknesses. But under the hood, this is the bigger pictures. This is a story that's remarkable, a company that's growing, fantastically, has a great business model, just huge markets, factories coming online, new technologies, and it's definitely an interesting story, I think, for those three books.
I mean, and if we can go like 2 minutes longer, I think that point is worth focusing on, because in the Tesla community, there, a lot of people get called out for being like blindly bullish. I think us two in particular, like, we try our best. Obviously, we're invested in the company, like we think it's a good company, but I think we try our best to acknowledge, the negatives. And I don't know, I get a ton of comments all the time being like, oh, like this is just a Tesla bull channel, like super biased, yada, yada, yada. That's not the point. Like, I'm not trying to be blindly supportive of Tesla. Like the mission's great, but if I didn't think it was a good company, like I wouldn't invest in it. I invest in it because I think it's it's a good company. They have great products that has a lot of potential for growth, that fundamentally is a strong business. And that's why I try to always talk about like excluding regulatory credits, because people don't want to hear about Tesla being profitable because of regulatory credits. But even if we take those out, there's so many other things that you need to like look at to truly understand like how strong the business is right now and how strong it's going to continue to be in future quarters. And that's not like a bull bias thing. It's just straight looking at the numbers and understanding the numbers. Like there are valid criticisms. I think you can be very validly critical of Tesla in terms of, calling full self-driving when it's not. That's a fair criticism. Certainly some of the timelines here, especially related to autonomy, like those things are all fair criticisms and should be acknowledged and talked about. But at the same time, Tesla's made great progress. They're continuing to make great progress too. So I don't know.
Yeah.
Wrap it up with like a mini rant there, but
I hear you.
it's just, yeah.
Yeah. I'll go ahead and link to your talk at the Benzinga online conference where you actually went through some cool charts to debunk some of the objections regarding Tesla's profitability. I thought that was a great talk.
Yeah, that's kind of top of mind as I'm saying some of those things.
Yeah. Awesome, Rob. Thanks again for the great chat, and we'll talk to you later.
Sounds good. Thanks, Dave.
Right.